Every year, Warren Buffett releases a letter that Wall Street's smartest analysts study line by line. Hedge fund managers print it out. Business school professors assign it. And most retail investors completely ignore it. That's a mistake. Because buried inside Berkshire Hathaway's annual report is Buffett's actual thinking, how he values businesses, how he manages risk, and what he thinks about the economy. And today, I'm going to show you exactly how to read it the way he intended it to be read. Stay till the end, because I'll show you the one metric Buffett cares about more than earnings per share, and almost nobody talks about it. Most annual reports are written by lawyers for lawyers. They're filled with disclaimers, corporate jargon, and numbers designed to impress analysts, not educate shareholders. Buffett writes his letter differently. He writes it, in his own words, to his sister Doris, someone who's intelligent, but not a finance professional. That's his stated goal. Plain English. Real honesty. No fluff. In fact, in the very first pages of the letter, Buffett always tells you what went right and what went wrong. That self-awareness is rare in corporate America, and it's the first signal you should look for. Key takeaway number 1. If the CEO only talks about wins, be suspicious. Buffett always confesses his mistakes, and that's actually a green flag. Don't start on page 1 of the PDF. Most people do this and get lost in financial tables immediately. Start with the shareholder letter. It's usually 20 to 30 pages in. This is where Buffett personally speaks to you. Here's what to look for inside the letter. 1. The book value versus S&P 500 scorecard. At the very top, Buffett shows Berkshire's per-share book value growth compared to the S&P 500, going back to 1965. This is his accountability table. He's saying, judge me over decades, not quarters. When you see this, ask yourself, is the gap widening or narrowing? 2. The business segment overview. Buffett breaks Berkshire into 4 buckets. Insurance, Geico, Gen Re. Railroads and energy, BNSF, BHE. Manufacturing, service, and retail. Investments, stocks like Apple, Coca-Cola, etc. Each year, he explains how each segment performed and why. Read this like a business owner reading their own P&L, not a trader scanning for price targets. 3. The elephant gun section. This is where Buffett talks about acquisitions. What size deals is he looking for? What qualities does he want in a business? This section tells you what he values, and often predicts what he'll buy next. Here's the part most investors skip, and it's the most important. Buffett does not care about net earnings the way CNBC does. Why? Because net earnings include unrealized gains and losses from Berkshire's stock portfolio. If Apple's stock goes up 20% in a year, Berkshire's net income looks huge, even if the actual businesses didn't improve at all. The metric Buffett emphasizes is operating earnings, the money generated by Berkshire's actual businesses, before investment gains or losses. He literally said in a recent letter, "Focus on operating earnings, that's what we do." So when you read the report, find the operating earnings table. Compare it year over year. Is it growing? Is it consistent? That's the engine of the business. Real example, in years where the stock market dropped, Berkshire's net income went negative, but operating earnings stayed strong and growing. That's the difference between a real business and a speculative bet. Berkshire's secret weapon is insurance, specifically something called float. Here's how it works. When you pay your car insurance premium today, the insurance company holds that money and invests it, before any claims are paid. That pool of money is called float. Berkshire's float is currently over $160 billion. And here's the kicker. Most insurance companies pay out more in claims than they collect in premiums. But Berkshire's insurance businesses historically earn an underwriting profit. This means they're essentially being paid to hold $160 billion that they can invest however they want. When you read the insurance section, look for 2 things. Is the combined ratio below 100? Below 100 equals underwriting profit. Is float growing year over year? These 2 numbers tell you whether the insurance engine is healthy. Now let's talk about the part everyone obsesses over, the stock portfolio. In the annual report, you'll find a table of Berkshire's major equity holdings: Apple, Bank of America, Coca-Cola, Chevron, American Express, and others, along with the cost basis and current market value. Here's how to read it like Buffett. Look at the cost basis versus current value. Some of these positions, like Coca-Cola, were bought decades ago at prices so low the unrealized gain is almost unbelievable. This shows you the power of not selling. Pay attention to what he's adding versus trimming. In the letter, Buffett often explains why he added to a position or sold. These are rare insights into his thinking, don't skip them. Watch for the confidential holdings. Sometimes Buffett asks the SEC to keep new positions confidential while he's still building them. When he reveals these later, it's one of the most closely watched events on Wall Street. The annual report will sometimes hint at this. Okay, now the financial tables. I know, intimidating. But you only need to focus on a few things. Balance sheet, look for cash and treasuries. Buffett famously always keeps $30 billion plus in cash as a safety net. If this number drops dramatically, ask why. Debt levels. Berkshire's operating subsidiaries carry debt, but the parent holding company is conservatively financed. Compare debt to equity across years. Income statement, look for operating earnings by segment, as we discussed. Is BNSF growing? Is the energy business expanding? Each subsidiary tells a story. Cash flow statement, look for free cash flow generation. Berkshire's businesses are cash machines. Consistent, growing free cash flow is what allows Buffett to keep acquiring and investing. Here's a pro tip that almost nobody talks about. Read the footnotes. Not all of them, but look for the ones Buffett personally flags in the shareholder letter. He'll say something like, see note 14, or reference a specific accounting item. When he does that, it's intentional. He wants you to understand something about the business that the headline numbers don't show. Also read the risks section near the back. Most companies write generic risk disclosures. Competition, interest rates, acts of God. Berkshire's risk section is more specific and honest. Understanding what Buffett himself considers a real risk is invaluable. And finally, read the previous year's letter side by side. Did he accomplish what he said he would? Did his predictions hold up? Holding management accountable to their own words is one of the best ways to evaluate leadership quality. Here's the most important thing I can tell you. Most people read annual reports as investors. They're looking for a signal to buy or sell. Buffett reads them as owners. He's asking, is this business as strong as it was last year? Are the people running it honest and capable? Is the moat getting wider or narrower? When you pick up Berkshire's annual report, ask yourself those same questions. Forget the stock price. Forget what analysts are saying. Just read it and ask, would I want to own this entire business? Would I be comfortable holding it for 20 years? That mental shift, from trader to owner, is the single biggest lesson Buffett tries to teach in every single letter he writes. So here's your action plan. 1. Download the latest Berkshire annual report from BerkshireHathaway.com. It's free. 2. Start with the shareholder letter, not the financials. 3. Find the operating earnings table and track it year over year. 4. Look at the float, the cost basis on the stock portfolio, and the cash position. 5. Read the previous year's letter alongside it. Do this once a year, and I promise you, your understanding of business and investing will compound just like Berkshire's returns have. If you found this useful, hit the like button and subscribe. I break down investing concepts like this every week. And drop a comment. What's one thing from Buffett's letters that changed the way you think about investing? I'll see you in the next one.